Thank you for finding time to join us in today's session. So more people are joining. Even as they join, let me try and check what number we are or which week we are. We should be on the 5th week, if I'm not wrong, but I stand corrected. So welcome. More people are joining. Yeah, so today is our 5th session. And today we have planned to talk about financial modeling. And our trainer will be Luni. I'm sure by now all of us we know Luni. And thanks so much, Luni, for finding time to be able to take us through the different topics that we have lined up. Last week we did have an exciting session where we were able to look at pitch deck. And today we want to continue with the same conversation, preparing ourselves to be investor ready, but most importantly, to be able to create a viable pitch deck, looking at the key elements. And one of those key elements is around financial modeling and many other topics that Luni will be able to cover today. So just a quick reminder, feel free to choose the language that you're comfortable with. Just click the globe icon and then choose either French or English, and the translation is actually working. If you're not speaking, we'd kindly request that you mute yourself at all times. And then if you do have any question, feel free to put it on the chat. No, on the Q&A, sorry. Feel free to drop your question on the Q&A. And at the right opportunity, we'll be able to share with them, with the right people. So welcome, all of you. We want to start with Luni. And again, today we are looking at financial modeling, getting to understand what it is. And I'm sure Luni has been able to line up a very exciting topic for us to be able to benefit. Luni, if you are ready, maybe you could start.
Thank you, Samuel. Yeah, so the topic on the agenda is financial modeling, but I'm going to cover a lot more than that today. And I'll explain why in a little bit. In general, knowing your finances is incredibly important. Basically everyone on this call, there's 80 people on this call. You're all running businesses. You all want more money. You want to raise money from investors or grantors or whatnot. They're all going to ask you how much money you need. And you don't do that by just picking a number out of the blue. You don't do that by picking a number out of your gut. You do that by actually building a financial model and figuring it out on paper in a spreadsheet. And then as your companies grow and prosper, the same people will be asking you, how well did you do in the past? What was your historic financials will be the term we'll use. And you got to be able to answer that question too. And that's actually a different set of skills. How well are you doing your accounting? Are you producing financial reports? Is the quality of your audited financials sufficient? And so forth. A lot of the entrepreneurs that I work with and have worked with over the years, this is not their favorite topic. This is not something that they, if we listed everything there is to do in a company, product design, sales, marketing, operations, accounting, often accounting is the bottom of the list in terms of popularity of founder CEOs. Unfortunately, you just need to know it. Like you can't get away without knowing this. You will not build a big successful business if you don't know financials. So I implore you to learn it. Like whether it's painful or not, whether you like it or not, you should learn it. So I have a bunch of different tools that I'm going to walk you through to help you do a better job of this and to help you like this more. First one, off my website, it's a blog post I did. It's called Forget Accounting. I taught this at the Land Accelerator many years ago. It's sitting up on the website for you to read and learn. I'm not going to go through the details. I don't think I'm going to go through the details. Next slide. Yeah. I'm not going to go through any of the details. I'll just tell you that accounting for a lot of people seems intimidating. It just seems like some magical formulas. It's not. So the forget accounting lesson and spreadsheets that go with it show you that it's really just a list. Like it's really just a list of transactions and then summing up those transactions in different ways. And so I really do, if you're running a little business, less than $50,000 a year equivalent, go read this one and just start using these practices. You don't need QuickBooks, you don't need Xero, you don't need a complex piece of software. You can do this in Google Sheets or you can do this in Excel. All right. The result of that, or the results that you get out of QuickBooks or Xero or any of those other tools, are called financial reports. We're going to start by looking backwards. So when you talk to an investor or you walk into a bank or you're applying for a grant, they're going to ask you for your financial reports. And what they mean by that is they mean your income statement, your balance sheet, and your cash flow statement. Like that is the minimum financial reports. There's 3 of them. Sometimes they have different names. The income statement is also called a profit and loss statement or a P&L. Sometimes at a QuickBooks, it's called a statement of activity. It's all the same thing. It is showing, we'll see these later. It's showing how much money came into the company from customers, where it got spent, how much is left over at the end. Balance sheet. A balance sheet is showing all the assets that the company owns and all the debts, all the liabilities, it's called, that the company owes. And those 2 sides should add up to the same number. There's a way to do that. Half of that is fictitious. The list of assets is sometimes not real numbers. On the other side, the equity value of the company is not a real number. There's a little bit of accounting magic in there. But the balance sheet is a useful piece for the investors and others to see because it tells you how much cash is in the bank. The P&L and the income statement doesn't do that. And then the least valuable of all of them is the cash flow statement. It just shows how the money's moving around. How much total money, how much cash came into the company, how much cash left the company for the month or the quarter or the year. Was that a positive or negative amount? Is this company burning cash? Is that how we talk about it? Or is it creating a lot of new cash? Free cash, it's called. So let me just show you one of each. Like these are real financials from real companies. This is like applicants to the Terra Fund, I believe, from years ago. So this is an income statement. It's got 2 time periods. I presume it's a month. I don't even know what currency it's in. Some sort of shillings, maybe Kenyan, maybe Tanzanian, don't know. It starts out, an income statement starts out on the top line with revenues. So there was 162 million somethings that showed up in June of 2018. There was no deduction from that, so we're just repeating the number again in terms of sales. There's a cost to producing products. Like if you have a physical product, there's a cost of making that product happen. 1 unit of that. There are costs associated with creating 1 unit that's available for sale. Those are your cost of sales. Sometimes they're shows as positives, sometimes negatives. Parentheses in financial models and financial reports are negatives. So the total cost of this product was 60 million, whatever currency this is. And so the gross profit or the net revenues, there's a lot of names for these things. The money left over to run the company was 102 million currency units. And that's just 162 minus 60. There's just arithmetic. There's nothing in the income statement that isn't just addition or subtraction. It's a very easy statement to create, right? No ratios, no nothing. It's really simple. And then we can see that it's down from this previous period, right? It's down from April. So given it's April and June, probably these are quarters. That's probably the quarter ending April and the quarter ending June. It would be very nice for this income statement to tell us that this should be Q1 18 or Q2 18, as opposed to what it seems to imply quarters here. It could be that the whole thing said it was the quarterly report, which might have been a hint. But again, it's nice that these things are nice and clear. Okay, anyway, so here we are. It's June. We have 102 million, let's just call it shillings, to run the company. And this company spent 50 million in normal fixed operating expenses. There's lots of terms for this. Fixed expenses or operating expenses are the two common terms. These are expenses that you just have to pay each month to run the company, not related to how many units you built. So this is the rent. These are most of the salaries. This is the fuel for the trucks, utilities, electricity, telephone, paper clips, anything that you spent for that month that you don't have at the end of the month, all gone. That's the operating expenses. So again, you just do arithmetic here. It's 102 minus 50 is 51. Right, 122 minus 84 is 37. So in this case, right, revenues were way down, but operating profit is up. That's a good thing, right? We want to have a profit. We're trying to run companies here that have a profit. You have to pay income tax on profits. So that's underneath that line. So this is the first line that talks about profits, but not the bottom line, as we call it. Income tax goes below this line. Interest on loans goes below this line. And then you get the bottom line, the actual profits you have left over. There's a couple of things that can be misleading in here. It's very hard. Accounting is not a precise, well, it is a precise science, but it doesn't tell a precise story. So it could be that you sold 162 million shillings worth of product, but customers don't have to pay you for 45 days. Or it could be the customers don't pay you, whether you give them the option or not. It could be that the customers don't pay you. This is generally how much money you would get if all your customers paid you. Nothing on here is telling you how much money the customers still owe you. That's over in the cash flow statement. That's called accounts receivable. So this could still be misleading in terms of how much profits were left over. You also notice there's notes in here. So if we scroll down into this document, we would find a lot more detail in the notes on revenues, cost of sales, and operating expenses. Okay, here's what a balance sheet looks like. Oh, apparently we're in Tanzanian shillings. So this looks like it's the same company because we have the same dates on the top. Now at least we have a currency symbol. So it's two separate pieces, often shown top to bottom or left to right. So it's assets and liabilities are the two pieces. And so we can see that the total list of property is worth 311 million shillings, up from a quarter ago. So hopefully something was purchased. There's no inventory. We can see, so somebody owes us 4 million shillings, or some people owe us 4 million shillings here. And there's 161 million shillings in the bank. This is actually upside down. It's supposed to be most liquid to least liquid in order. So it should be cash and then trade receivables and then inventory. But yeah, that's the standard. It doesn't matter. That's just the standard. And we can see that we're down a little bit from last quarter. And this line of assets is not the most accurate thing. This is not how it's supposed to be. How much would you get if you sold everything tomorrow, if you shut down the company? Usually it's not that. Usually it's the accountant has a way to calculate that number. And then on the other side, it's okay. This is how much the company is worth, more or less. How much does it owe? So there's a 340 million shilling reserve. It's interesting. There are retained earnings, so that's the profits from the previous quarter. And so this is claiming that there's 461 million shillings of value in the company, that there's no loans that would be listed under here under liabilities. There's no accounts payable. There's no bills that need to get paid. It says here that the only liability is that the taxes haven't been paid yet, that this company owes 15 million shillings in tax and hasn't paid it yet. And so why are we adding that in? I don't know why we're adding that in, but you can see that the two sides of this balance sheet balance. They're the same value. Again, most of the time when I'm reviewing this document, I'm just looking at how much cash is in the bank, how much is receivables, and how much loans are due. So those are the only three pieces I'm looking at. Okay, and the last one is the cash flow statement, which I said is the least commonly used, or the least important of these. And we're just looking at, okay, again, what was the surplus from last year in this case? Last year, should be last quarter. I'm going to skip over that part. I'm going to look at the changes in this case in receivables and payables. So oddly, there are some payables, but they're not listed as liabilities for some reason. They purchased, remember the assets went up? Well, here we go. There was a purchase of property. So anything you're buying that lasts more than the month of the quarter or the year, the capital expenses, they show up in the cash flow statement. And they just show up here as you use the cash to buy something, it should be listed here. And then total cash and cash equivalents is at the bottom. So how much money is there to spend on this company? If this ever goes negative, then it's game over. All right, that's a really quick view of financial reports. If that was not a review for you, then what you should do is go to YouTube, find a class on business financials, right? Finance for business. There's dozens of them, and watch one of them. Literally, I know. I say if this is not a review and this is not an area that you're comfortable with, you should fill in that gap in your knowledge. Then probably the number two thing you can do in building a more successful business is learn finance. The better handle you have on your money, the better chances you have to build a successful business. The number one thing you can do is go and sell to more customers. Like I had a friend of mine who worked at a few of my startups, and one of his favorite lines was, revenue solves a lot of problems, or revenue solves all problems. You bring in money from customers, you can ignore your finances for a while, and then you'll discover your accounts payable are too high and you don't understand how that happened, and then you're in a hole and you should have learned finance. Number two thing you can do is just learn finance, make better projections, do better reporting on what you've actually done. You'll be able to see the future through the spreadsheets. Okay, talking about the future. So that's all financials looking in the past. How do you predict what's going to happen in the future? To do that, you build a financial model. So in a financial model, you can answer a bunch of really important questions. You can answer the question of whether or not your company can ever be profitable or can ever be sufficiently profitable to grow. You can answer the question of, are you burning cash right now or are you generating cash right now? You can answer the question of, can the company afford to take on a loan? And if so, how big of a loan? What terms can you accept? The financial model can answer that for you. It can answer the question, if you sell equity, how much equity you're going to sell in order to attract investors. And it can answer a lot more questions than that, and then it's just a spreadsheet. And once you get good at making these financial models, it just takes a few hours to answer these questions. When you haven't done this before, it might take you a week, a few hours a day, every day for a week. It's the kind of thing where you want to sit on it and sleep on it over and over again. But it's just a bunch of numbers. It's just a bunch of guesses on what's going to happen in the future. And when you put them together in a certain order, it will answer all these questions for you. They're incredibly useful. All right, and there's a book. Surprise, surprise. There's a book that will walk you through the entire process. So this is the link to the book, and I'm not going to repeat everything from the book because it's already online. And there are videos that go with this. So when you go to that website, there'll be a link at the bottom for a link off to the classroom, as I call it. And on the classroom, if you prefer to have me speak this to you, you can do that. You can find the financial planning podcasts in the Next Step podcast if you want someone to talk to you, or if you prefer to read it, the book is online. And The first thing people will ask when we talk about building a financial model, right, a financial plan, is where do I download the template? You don't. So what I've learned over the years, and again, working with thousands of entrepreneurs, is the best way to build your financial model for your company is to build it starting with a blank spreadsheet. If you start with a template, it won't come out good. You will get confused. You will have issues in that template, in that filled out template, that are much bigger than any issues you'll face in trying to build it from scratch. I highly recommend that you build it from scratch. If you ask me where the template is, I will tell you there is no template. And if you ask anyone on the staff, where can I get the template, right? Or ask on Mighty Networks or in WhatsApp or whatnot, the answer everybody should reply to you is there is no template. Build it from scratch. Okay, so here's what you're going to put on a single spreadsheet page. It's a lot. It didn't fit in one column. I had to put it in two columns. So I'm going to walk you from top to bottom in what's expected, not how to come up with the numbers, but what's expected and how this gets read and understood. It's telling a story, right? Which sounds really strange that spreadsheets tell stories, but spreadsheets can tell stories too. So it starts out with the topic of where's the money come from? And when I showed you the income statement 10 minutes ago, the top line of the income statement, and that's literally what we call it, the top line is money. Money showed up. That's nice. Remember, there was a note in there that we didn't get to. In the financial model, we're not going to start with money. We're going to start with how many units did you sell? What's a unit? A unit is whatever you want, whatever is a natural sized item that you're selling from your company. Could be a bag of organic fertilizer, could be one seedling, it could be 100 seedlings. Yeah, can you guys please stop drawing on the screen? There's no need for you to draw on the screen while I'm speaking here. Clear all drawings. Okay. So how many units are you going to sell? So this is going to be done in months. How many units are you going to sell in a given month? And if you've been keeping track of this in your company, you know how many you normally sell or have been recently selling. So, guessing into the future isn't that hard. You're guessing that you'll sell more, right? At some point you'll sell more. Second line, what was the average price? What was the average amount of money that you were being paid for each unit? Sometimes you sell small, medium, and large. Sometimes you sell, 18 different kinds of trees. That's all nice. We just want one number, just to start with. We want to make this as simple as possible. What's the average? What's a good number to throw in there? Right? And then gross revenues is simply number of units times average price. That's it. It's multiplication in this case instead of just addition. So we multiply those two numbers together and we wind up projecting how much revenues should appear in that given month. Right? We do that for each month, right? At least out to a year. Ideally out for 4 years or 5 years, but at least out for 1 year. Okay, next thing is how much does it cost to make one of those units? So anything related, how much, what's the pot cost if it's with the pot and the soil cost if it's a seedling? What is the inputs cost if it, per unit if it was organic fertilizer? If you're growing a chicken, how much was the chick? How much was the feed? Things like that. Cost of growing 1 unit. If you can put the labor in there for people who just make those units, that's good too. If you can't, that's fine. We can live without that. Right. So ideally, what's the cost of goods per unit? Just like you have an average price, you have an average cost, and you multiply those together. And ideally, you're selling everything that you produce. There's no inventories. Inventories just makes this complicated. So maybe in the financial model, if you have inventories, you just ignore that. So how much did it cost to make those units for that month? And then you do, again, it's just subtraction. So the total revenues minus the cost of goods is the net revenues or operating profit. Again, they have lots of terms for these words. I like to just use the word revenues over and over again in the top section. because it's all revenues. So net revenues is basically how much money do we have to run the company, right? You can't, if you have to, buy the pot and the soil to make the seedling and the seeds, right? And the cost of the people to do all the planting, like that's not money you have left over to run the company. So we took that out first. Then we have the fixed expenses or the operational expenses for that month. That's the salaries, any legal costs, any rent, any utilities, anything else that gets spent that month and is gone at the end of the month. Add that all up, right? Net income is just your net revenues minus those operating expenses. And it's called net income loss because sometimes that number is negative. If it's negative, you put it in parentheses. There's a way in Excel and Google Sheets to say, I would like negative numbers to be in parentheses. So you put those in parentheses. You can even make it red. The standard is numbers in parentheses should be in red. Numbers in red are negative numbers. We don't want to see too many negative numbers. Okay, that would normally be an income statement. You can stop there if you really want, but it doesn't tell enough of the story. That is, this is how many units we built. This is how much money we earned from selling those units. This is how much it cost to run the company. And this is how much money was left over from all that work. But that doesn't talk about equipment. It doesn't talk about any investments to come in. So it continues down. All this stuff is below what would normally be the bottom line. So the next section is capital expenses. This is anything you're spending money on that lasts beyond the month, right? So this is the equipment you need to make those units. This is buildings. This is land. This is trucks. This is anything that lasts for a while. So how much did you spend on that this month? And normally that would be on a separate statement. I showed you it's on the cash flow statement. It's not on the income statement, but it is a use of cash, and it's really lovely to see it all in one spot. It makes it much, much easier to make these projections, especially when we get to the very bottom and you have to start adjusting these numbers around. Well, you might just put off buying that truck for another month or 2 or 3 or 6. And it's easy. You just move it over. Okay, that will add up to another number, and we could make another subtotal at that point, which was net income minus capital expenses, but we don't do that. We make one more section, which is how much money came in or out of this company, not from customers, from other sources. So that could be from you and your pocket. It could be from grants or sales of equity or loans or anything else. Any money that came in from investors, right? Investment capital or grant capital. So we just make a section for that. And I like to just have lines separate for each of these things. And especially 2 lines for loans. Money that came in from loans, money that's due out as loans. And technically, according to the standards, the accounting standards, the loans outline belong over here. They actually belong between the net income line and the profit line. But I like to stick it all together over here and into cash in, cash out. And then what we can do is we can take the net income and we can subtract the capital expenses, and we can add in the net cash change from this investment and loans. And we can get a number per month that shows how much did the cash go up or down. So this is kind of a simplified cash flow statement. And then at the very bottom, we can compute a number that actually uses the last column. And it's computing how much cash should be in the bank at the end of the month. So it's just the balance from the previous month plus this net cash number. And that's predicting how much cash is in the bank. And when you put this all together and you do this for a year, and you don't include anything in the investment line, sometimes, I say more often than not, this number goes negative. And you can't run a business with negative cash. Like the bank doesn't let you have negative cash. You can ask for an overdraft, and then they'll provide you some money, which you have to then put in here, right, to balance it all out. Right, make a line called overdraft. But you can't actually have a negative balance in your bank account. That's game over. That's the end of your company. So the point of building the financial model is to build it out, put in the number of units that you want to sell, put in all the growth that you want to see. And then at the bottom of the spreadsheet, it will tell you how much cash you'll be short. And then you'll know how much cash you need to raise as equity or loans to balance it all back out. It doesn't mean you'll get the equity or loans. It just means that it will compute how much do you need. And then it's up to you to decide what to do. Do you lower your growth so that you can simply grow on profits? Or do you start seeking capital now in order to get that money when you need it? Right. And it takes a while to get money from investors. Do you start looking for grants to fill in that gap? Like, that's up to you, but now you'll know exactly how much cash you need. That's the point of doing the financial model. Like, and then you can adjust it as needed to fit whatever you want. All right, and it looks something like this. So we have 12 columns, January, February, March, April, May, June. Might just do 12 columns per year. There's a sum on the right side of the 12th column, a 13th column. That's just a sum of the 12 columns, right? And it's exactly what I showed you. It's units, average unit, multiply that together. Get a cost per unit, multiply that by the number of units, right? Net revenue is just a subtraction of that. And then a whole bunch more units. And now I'm doing everything in dollars here because I'm American, right? A bunch of fixed expenses, add that all up, subtract that from the net revenues. That gives you the net income line. Here's some capital expenses, the investor capital that came in or out, and the cash balance at the bottom. The details of this is sitting in the book. So if you want, you can take screenshots, but better to go read the book. Right? That's all a financial model is. So this is a 1-year financial model. And again, what's expected from you, from investors, is at least 3, ideally 4 or 5 years. Okay. Hi, Tanya, you can go on mute. Okay, there's a bunch of other things that, again, are in the book. Let me just go through a few of them that are important. So by default, Google Sheets and Excel will show pennies in these numbers. We don't need to see the pennies. It just makes everything much harder to read. Like the fewer digits, the better. So there's also a control that will get rid of the pennies. So find that control and get rid of the pennies. The only exception is when you have a price that's under, $5 or a cost of good that's under $5, then show the pennies. Everything else should not. And unless your currency is I don't know of any currencies in Africa that are like equivalent to where 1 unit is a penny instead of 1 unit is $100. Make sure you use commas or periods or whatever your culture uses to split up long numbers into groups of 3 or 2 or 3 is normal in most African countries. Just make sure it does that. It just makes you want the numbers to be as easy to read as possible. In dollars, you have to have a dollar sign if the number that you're showing is currency and the currency is dollars, there should be a currency symbol. So this is the rule that's a holdover for me teaching Americans. In Africa, it's not that common. In Africa, there's usually 3-letter acronyms, and they're not shown all the time. It's really useful for sharing these with Americans and Europeans to make it clear what currency we're looking at. So sometimes we just add those in anyway. In the accounting standards, I showed you some of the reports where some of the totals were negative. That's just confusing. The expectation in financial models is that all values are positive, right? So revenues into the company are positive numbers. Expenses is money leaving the company, but it's still shown as a positive number. And then you just subtract it. You have to get the subtractions and the additions correct to make the numbers accurate. But all the numbers should be positive. I already showed you negative numbers should be in parentheses and in red. There are 2 ratios that are really useful to generate. I didn't show them in the outline. One's called gross margins. Technically, it's gross margin percentage, but we usually just call it gross margins. The other one's net margin percentage, and we usually just call that net margins. So the gross margins, they're just the revenues after the cost of goods, which I like to call net revenues, divided by the gross revenues, the total revenues into the company. That gets a line put in under net revenues, and that is showing you what percentage of the total revenues you have to run your company. And if that number is 20% or lower, then your company is going to fail. It's a highly indicative ratio. If that number is shrinking over time, that's a problem, which is another reason why you should be looking at it. You should have gross margins at least 40%, if not higher. If you don't, you're going to have trouble creating a good company. And if you don't know what that means, again, you're going to want to go to YouTube. You're going to search business finances. You want to take a class. They'll teach you what that is and why that's important. Net margins is basically your profit margins at the bottom of the spreadsheet, the bottom of the income statement part of the spreadsheet. And that will tell you literally what is the percentage of the revenues that's left over after everything, right? After all your normal everyday monthly expenses. In agroforestry, that number's probably going to be around 10%. Could be 20. It's probably not going to be higher than that. I used to be in software. In software, our net margins could be 40 or 50%, which is super high. In agroforestry, 10% would be okay. Single digits, that's bad. You might have that single digit net margins. That's just a sign that you need to scale up. It's a sign that you're not at scale yet. And it's a warning sign because it means that if something goes wrong, if you're off by 5%, if your expenses are a little bit higher than expected, you lose money. And if you lose money too often, you go out of business. So you need a percentage that's high enough to absorb challenges. And that number is 12, 15, 17%. That seems to be sufficient. Okay, and then you do all of this in your local currency. Do all the planning and everything and all the reporting in your local currency. Because that's what you're doing business in. Unless you're an exporter and you're exporting everything. Just do all your calculations in your local currency. And then somewhere on there, show some of the numbers in dollars. And I have a whole system I use to replicate the whole tab and do a whole tab in dollars. I'm not going to show you how to do that. That's too complicated for today. But at least have one column on the right showing the year converted into dollars with the conversion rate in a cell. You don't want to hide the conversion rate in a formula. You want to have it visible because it's going to change over time. So you're going to want to have that visible so that the person reading can check it against reality and then see that you actually converted at a reasonable rate. And the reason we need to see it in dollars is that we can't think in shillings or francs or kwacha or any other currency. We being the Americans, we can only think in dollars, and we don't expect you to think in dollars. We expect you to think in your local currency. So we're going to have to deal with that by having copies somewhere. Okay, and so this is not part of the homework per se. We're not going to require you to submit a financial plan to us at the end of the 3 months, except we are asking you to supply us with a pitch deck. And part of the pitch deck, there's 2 pieces that are expected in there. One is your historic financials. So you're going to have to go back and make sure that those are in good shape and include that in some form in the pitch deck, right? Generally a graph. And then you're going to have an ask in your pitch deck, and you're going to have future projections in your pitch deck. And the way you create those is by creating a financial plan, right? A financial model. So you are going to need to make a financial model in order to have a believable pitch deck. So you're not going to hand in the financial plan as a spreadsheet, but you are going to hand in the results of that financial plan as part of your pitch deck. So whether you like it or not, you're going to be going to this page here and reading up on how to make a financial model. Okay, and this is what that first screen of that page looks like. So this is just, again, one of the 6 books that are sitting online. This is Building a Startup Financial Plan. Okay, and then I think I have two more topics to talk about today. So let's just take a deep breath there. Let me go look in the chat window. I see some bonjours. Okay, I see the link is in the chat window.
There's a
And
few
there's
in the
three questions.
Q&A for you. Yeah.
Yeah, let me do the two in English. Well, one in English because one's irrelevant. Okay. Moses asks, what happened when an industry collapses worldwide? Oh boy. This goes into another topic, which is savings, and we will touch upon that briefly here. So you're going to make a financial plan. It's going to look out, especially we're talking about looking out a bunch of years in the future. If you're exporting, you don't know, something could happen to the price of the commodity you're selling. What you need to keep in mind is that these financial models are never done. You just have the current version, you've iterated on it many times, you're happy with it. Something happens in the world a month later, you go back and you change your financial model. I'm expecting that you're going to be changing this financial model a few times a year. At Africa Eats, I'd say we update ours 2 or 3 times a year and have since the beginning. I think we're on version like 20 of our financial model. We're 4 years old. I'm not exaggerating there. Like I did a whole bunch of models before we even launched, and then we've been updating it ever since. They're never done. They're just the best one you have at the moment. What else can happen? Well, it just doesn't have to be an industry. It could be that there was a drought and you couldn't buy any inputs. Or right now there's flooding going on in East Africa. And so maybe all your inputs got washed away and you can't operate this season. Yeah, happens. Well, that's why you need savings. That's why you need some cash or a line of credit or some manner of continuing to pay your bills even when there's no revenues. Those are all important things to do as you scale up your business. Things like this will happen. Challenges will occur that will be unexpected. The only way to get past them is cash in the bank. What's the translation to the second one? Please comment. I don't know, Notre on Enterprise E-Group.
That one says, how can we project or model our E-Group company?
Oh, I don't know I don't remember what E-Group is. Every company is different. This is again why I highly suggest you don't use a template. Every company is a unique entity on itself. It has differences from other companies, and so it's best to start from scratch. It's best to have the expenses that are related to your company and not a whole pile of other expenses that they're all zeros because they're not relevant to you. And these models can get more complicated if you do have more than one product you sell or more than one service you provide. Then in the top, you can have multiple sections, one for each product or service. You can calculate your gross margins for each of those. That's useful if you have a complicated business. The way your inventories flow. You might have a business where you build up an inventory in the first half of the year and sell it in the second half of the year. Well, the way I just showed you to do it isn't very relevant then. It's not an accurate enough business plan. So you would have to model your inventory and how much money you're spending building the inventory in the first half of the year and how much you're getting in the second half of the year to make sure you can pay for the expenses in the first half of the year. Right. And it could be 2 seasons. It could be you have inventories twice. Right. And in some businesses, as soon as you have the product, you sell it and get paid the next day. So those are very 2 different kind of businesses that need 2 different models. Okay, so let's go to I'm dismissing those, so we're out of questions. Let's go talk about KPIs. So this is a related topic. A KPI, it stands for Key Performance Indicator. It's a numeric number. It's things like, well, I'll have examples in a minute. So If you're not doing this already, you should have a weekly meeting with your management team. They're typically Monday mornings. Doesn't have to be, but more often than not, people do these Monday mornings. They should start with the first topic of every weekly meeting should be 3, 4, or 5 KPIs. Right? Again, these are numbers you're using to measure your business. I'll show you examples, but anything you think is relevant to measuring your business. The reason why you're starting with these, and you should be seeing this week's numbers compared to last week's numbers, and you should be seeing this month's number compared to last month's number. And then as you get to be an older company, you should also be comparing it against the same month of the previous year, or the same week of the previous year, or the same quarter of the previous year. And you should be looking at these quarter after quarter as well as month after month and week after week. These are the indicators showing whether your business is doing well or doing poorly, and you're going to choose what they are. These are, again, unique per business. And then as you get to be a bigger business, there'll be departmental meetings once a week as well, or every other week, or some periodic basis. Each department should have its own KPIs as well. And so if each department has 3 or 4 or 5 KPIs, and you have a sales department, and you have an operations department, and you have a finance department, you have too many KPIs to share at the corporate level, so you're going to have a subset of those at the corporate level. And you might have one in the corporate level that isn't a departmental KPI at all. So the ones at the corporate level are just a small handful that are really important that everybody on the management team should be watching. So what do I mean by KPI? Could be number of units you sold last week. Right. So my friend Yusuf runs Obama Stove, a land accelerator company that does cook stoves in Ethiopia. Like, okay, it's a manufacturing company. It has a physical product. How many units got sold? And it could be that the more important metric is how many units got built, right? Well, it could be that the more important unit is number of units that got ordered, right? Depending on where you are in your business and what's most important to you. And so often it's revenues, and so often units sold is more important, or units ordered. And then you can compare units ordered to units manufactured, and if you're having trouble manufacturing. Usually one of the top KPIs is total revenues, right? And again, is this the revenues of how much customers promised to pay last week? Or is this revenues as in how much cash actually showed up from customers last week? Those are two different numbers, right? In most businesses, those are two different numbers. Which one is your more important KPI? It's up to you. I mentioned gross margin percentage, again, 5 or 10 minutes ago. It's a really useful number to watch. Ratios are often really good KPIs as opposed to just the raw number. So watching your gross margins and making sure it doesn't drop, right? It's a way to watch your cost of goods at the same time as watching your revenues. It's a way to watch, parts of your cost of goods that might be out of your control, all wrapped into one number, right? One simple percentage number. If you're in a business and you're providing products to customers who pay you in 30 or 45 or 60 days, then you are generating a accounting line called accounts receivable. How much do your customers owe you? If that's a growing number, you should probably talk about that every week with your management team, or at least talk about it with your finance team. It should definitely be a metric on your finance team if this is a number that's not holding steady. And as you grow your company, it usually gets bigger. It usually becomes more of a problem. It could be you're watching your total expenses, right? It could be watching your net margins, which is also watching both your revenues and your total expenses. There's no right or wrong answer here. There's always more KPIs you could be looking at. The reason why I'm saying you should just look at 3 or 4 or 5 of these is you're going to be mentioning these once a week, 52 times a year, because these are the ones you're going to be trying to change. Like whatever you're measuring is what you're going to be talking about in terms of how do we optimize, how do we make these better? right? Up or down depends. Some of them you want lower, some of them you want higher. So these are the numbers you're going to be managing your company to. And what I've seen before is accounts receivable flying up. Nobody's watching that on a regular basis. It becomes a crisis after so many months. I'll get a call from the CEO saying we're out of money. I'll say, why are we out of money? You told me the revenues were doubled in the last 6 months. And they go, yeah, we're out of money. I go, okay, but what's the cause of the out of money part? And I go, well, the customers, they owe it, they haven't all paid yet. And then when we dig in, we discovered that the accounts receivable more than doubled over the period of time when the revenues doubled. Nobody was watching that. And it just showed up out of the blue when they looked at a financial report. Well, when they saw the bank balance was nearing zero, then they dug in to figure out why, and only then did they discover their accounts receivable was the big challenge of the business. If they had only been looking at that over the past 6 months, they would have stopped providing credit, as long a credit to the customers, or they would have slowed down sales, just so they wouldn't run out of money, right? Again, if you run out of money and no one will provide it to you, you lose your business. Like, so your literally your revenues can double, and that can kill your business. I'm gonna say that again because it's not intuitive. You can double the size of your business in terms of revenue, in terms of units sold, and you can kill your business by doing that if you have too much credit out to your customers. Lots of things can kill your business. It's hard to grow a successful business. Okay, over in the finance department, there's a bunch of other KPIs that you could be looking at. You could be looking at the cash in the bank. Like, you could do that at the top level as well, but it's hard to manage cash in the bank. There's too many levers on that. But the finance department should probably be looking at how much cash is in the bank, making sure that's a positive number, right? It can be looking at sales bookings versus that accounts receivable line, and maybe even the ratio of bookings to receivables to see what see how much credit is being handed out. How much cash came in the door last week? That's a good number to look at. What were the total expenses last week or last month? That's a good number to look at. And there's also this other line, which is accounts payable, which is kind of the opposite of receivables. So how big is that pile of bills that you owe, right? And when are they owed? How much behind are you on that accounts payable? Like, you have some control over when you pay a bill. Like, they're usually not due the day the bill shows up. They're usually due 30 days later. Are you using all 30 days? Do you need to use all 30 days? Okay, over in operations, we have things like number of units produced. It's a good number to keep track of in terms of operations. And how much of those units are sitting in inventory versus, what was maybe the net change in inventory is another way to look at this. What is your average cost of goods? Right? We saw that in the income statement in the financial model. Who's watching that? Who's watching to see if that's going up or down? Who's managing to try and get that to go down? Because if you can get the cost of goods to go down, then your profits go up. How long does it take to make a unit? Have you ever looked at that? How do you shrink that time? The quicker you can make a unit, the less labor you pay, the more units you can produce with the same number of people. Like, you can optimize your operations by simply making it quicker to make things. How often are your machines being used? So if you are open for 9 hours a day, 5.5 days a week, then I won't do that in my head. There's a certain number of hours the machine could be used. How many hours is the machine used? Right? If you have a factory that's making products with machinery, right, and those machines are only being used 10% of the time, well, then you have and you know this, then it will help you in your projected model to know, well, I can produce, if it's 10% of the time you're using your machinery, you can not just double your production without needing another set of machines. You should be able to grow production by a factor of like 8 without having to buy new machines. Versus if your machine is being used 80% of the time, then you probably need a new machine if you want to grow your business at all. Like it's very hard to get 100% utilization of any machine. So knowing that is a useful number. Same thing with trucks. Like it's always useful to have a truck. If you don't have one, you'll learn that soon, hopefully. It's not going to be used 100% of the time. There's going to be a maximum amount it could be used. But if you have a truck and it's just sitting around for 4 days out of 5.5 per week, then you probably want to find something else to do with that truck. Maybe you want to hire it out and earn some money on it. But it also, again, will tell you, can you double this company without buying another truck if you have a truck and it's not being used half the time? Okay, marketing is a lot harder to measure. How much did you spend on marketing is a good number because it's the only one that you can actually count and know that it's true. Knowing your number of followers doesn't tell you anything about how sales are going to go. It's a number. It's just not a very useful number. People are drawing on my screen again. I don't know why people are drawing on my screen. Okay. A better number on the marketing side in social media is the number of new followers you have per week. Like you should be growing your awareness and growing your potential customer base. And so it's not how many people are on Facebook liking your page or Instagram or whatnot. It's how many more did you add? And so what's a good number to add each week? I don't know. It depends on the company and how much you're spending. But if you can add more each week, that's good. Like then you have a potential to grow. How many billboards have you rented to put up your ads? How many radio ads are you running? How many coupons? How many coupons got redeemed? Like those are the kind of things you measure on the marketing side to try and figure out is the money I'm spending on marketing bringing more awareness to my company or not? All right, so how do you start this process of measuring KPIs? Yeah, you pick some KPIs. You sit around in the first week and you talk about what are the 3 most important KPIs that we should be measuring. And then you pick them and then you start sharing them the following week, right? And you assign someone to go and produce this. So again, at Africa Eats, we start each week with an icebreaker. That's just something we do as team building exercise. And then the first thing we do as business for the week is Lily provides us with our utmost KPI, which is how much money do we have in the bank? We're an investment company, so we don't really have revenues. We have money to spend. How much money do we have to spend this week? And then the next thing she'll tell us is, why did it change? Did we get paid back some loans? How much got paid back? What were were any paid back that were early or late or unexpected? And then what were the big expenses we spent last week? Like, as in a financial company, that's the key KPIs for us is money, right? Our business is money. So that's literally what we do each week. And Lily was out sick. And so I literally just logged into the banks and looked up the number. Like in this case, those KPIs weren't hard to generate. So that we do know how to get those numbers ourselves. And Lily's not the CEO. She's kind of like the CFO. So her job was to generate those numbers. And that's it in terms of KPIs we look at per week. We look at finance. You should track them. So make a Google sheet or an Excel spreadsheet. Put your weeks at the top of the in the column headers. And what I mean by weeks is I literally mean like week 1 of the year, week 2 of the year, week 3 of the year, 4 of the year, 5, right? Whatever the first full week is of that year. That's week 1. And then make a separate tab with January, February, March, April, May, June, and just start putting in the numbers for the weeks and the months. And by the end of the year, you'll have it all filled out and you'll be able to like plot them and see if they go up or down and start talking about trends. Okay, I'm going to stop there and then I have one more topic after this. Okay, there's a question in the chat that says, I have a question. My local currency is the CFA franc. and I want to submit my financial report in a foreign currency, for example, dollars, what's the currency converter I can use, since there are several? Yeah, generally I just go to Google and I ask it what the conversion rate is, and I'll just use that, knowing that that's not a rate I can actually get, that the banks will charge me a fee on top of that. But yeah, I'll just use Google. OAND is fine as well. You know, it's good. The CFA franc and the West African franc are pretty steady compared to some of the other currencies. But even when the other currencies are moving around, we just need a snapshot. We need to know what the ballpark is, as we say. We don't need to know the precise number. We'll figure that out later. So you just go in and ask Google. I'll literally just type in 1 USD and then the name of the currency, and it will just tell me in the Google result. Okay, I did that question in French. The other one says, I don't know what that says in when someone come and translate me the question in the Q&A.
Yes, Ronnie.
Hello.
He's asking if there is a French version of that book.
Oh, yeah, sorry. No, I don't believe there's a French version of that book. No, you're gonna have to, sorry, you're gonna have to dump it into Google Translate. Or you can put the URL into Google Translate, and then it will generate a French version of that website. But I don't have an actual French translation. I don't think so. So sorry about that. Okay, last topic of the day. We're going to talk about financial management in a different way. Oh, hold on. One last question. Oh, anonymous. Okay. I need orientation. Are the KPIs developed for the whole company or should each department? If you have a big enough company that's having departmental meetings, then do it per department. If you have a company with 10 or fewer employees, just do the top level KPIs. Okay, moving on to the last topic. So again, what we're seeing commonly at SMEs in Africa is a struggle to get on top of the finances. What I mean by get on top of is ideally, as I'm assuming most of the people on the call are CEOs, ideally the CEO should be able to know the state of the company, that the financial state of the company from yesterday. And when a month is complete, like, so if today is June 1st or June 2nd, I should already know May's results. And if today was July 1st or July 2nd, I should not only know June's results, I should know Q2's results, right? And on January 3rd or 4th or 5th, I should know last year's results and the fourth quarter results and December results. And what we typically see is that those annual reports aren't generated until June, May or June or July, depending on when the taxes are due. That we're generally seeing that quarterly results are being delivered to CEOs like 45 days later. It's just there's much too long of a lag time between running the business and actually generating the revenues and getting a report on it. And that lag is causing financial crunches, cash crunches. It's causing trouble, right? And so when I run my businesses, I expect the accounting to be up to date from yesterday, right? And if it's 2 days, that's fine, but a week late is just unacceptable. There's just too many things that can go wrong if you're not watching your finances. So we came up with a system, and we shared this at the Africa Eats Africa Trees gathering earlier this year. And this is based on some stuff that I actually do with my nonprofit. I don't do this with every company because We did actually come up with this until recently. This is not, you're not going to find a class on this online. This is one of the things that that was learned by experience over my 30 years of experience. So it goes like this. You shouldn't have one bank account for your company. You should have three. And the way you're going to organize those three accounts is one's going to be called in, one is going to be called savings or operations. It doesn't matter what the middle one's called. That's the one you have today. And then you're going to have one called out. And here's how you use these three accounts. All the money that comes from customers gets deposited in the in account. Say that again. So this is the account you're going to share with your customers on where they send the money. If you have cash that you're collecting from customers, this is where you're going to deposit the money. If you have wires or however money comes in from customers, all the money goes into the in account. And then at the end of every single day, someone in your company is going to sweep the money from the in account to the savings account. Okay, sweep just means move, right? And it's internal to the bank, so they shouldn't be charging you fees to move money between accounts. So you're gonna have three accounts at the same bank. All the money starts at in, and at the end of every single day, the money gets moved to savings. So the balance of the in account at the end of the day should be 0. If the bank charges you a fee for having a 0 balance, then leave the minimum balance in there. But the point is that you're not leaving any excess money in that account at the end of the day. Okay? Why would you do this? Well, for one thing, when you log in as CEO at the end of the day, now you can go log into the bank at the end of the day, or you can get a report from whoever's doing the sweep. And you can see how much cash came into the bank today, because it's not jumbled up with anything else. It's not a mix of credits that came in from customers and debits that went out for accounts payable or expenses or payroll or whatnot. It's all, the only thing that's in the only transactions that are in the in account are all of the various payments that came from customers and one transfer at the end of the day. So when the bank creates a statement that says, here's how much money was deposited in the bank this month, that's the income for the month. It's really nice and clean. So I do this at my nonprofit, and I log into the bank every day, and I can just look at the deposits account, call it. That's it. And I can see how much donations showed up at the nonprofit today. I don't have to go look. I don't have to dig into anything else. It's literally right there. And not only is it right there, but I can see the various sizes of those deposits. I can see where they came from because there's a comment on each one. Like, I don't have to go to QuickBooks. I don't have to go do anything special. I don't have to, no accountant or bookkeeper has to do anything. It's just there. And as long as I do it near the end of the day, it's accurate for the day. I get a feel for how much money's coming into this business. And all I had to do was set up an extra bank account. It's lovely. And then it's swept and it's gone. So at the end of the month, like the bookkeeper can simply tell me, get on a spreadsheet that looks like that KPI spreadsheet, for every single day though, here's how much money moved. Here's how much money was deposited. Here's the sweep is the total. Here's how much money moved out of the in account that day, which is the total amount that came in. And then I can get a summary for the week, and I can get a summary for the month. And I have a lovely little KPI of cash in the door. It's great. So then what do you do with the out account? You don't do quite the same thing. What you do at the out account is fill it up once a month. So you should know how much you're spending each month. This is your total fixed expenses, total cost of goods. This is how much money you're spending to run your company. And so at the first day of each month, you fill it up with how much money you expect to be spending this month. How do you know how much that is? Well, you built a financial model. So it tells you on the financial model. This month, the cash outflow from expenses and cost of goods is X. So you put X into the out account. And what happens is you now have a daily report of how much money left, because that's just how much money left for the day. Like in the ledger of the bank, there's no deposits. It's not mixed in with deposits from customers and whatnot. That's all sitting in a separate account. So the ledger, right, the list of transactions for the out account is one at the beginning of the month. And then everything else is a debit that and it has dates on it. So you can sum them all up per day. You can sum them all up per week. You know it for the month because that's going to be in the bank statement. And then if it gets low, if this account is about to run out of money, well, then you have to top it up. And when you top it up, like your literally your bookkeeper or accountant will say, hey, we can't make this payment. Our out account is out of money. We need to deposit another, let's just say $500. Well, now you as CEO or founder CEO, now you know about that. Now you know you just went over budget for this month by $500. You can feel it again. You can see it and feel it because it happened. It was a transaction that you had to make special. And if there's money left over at the end of the month, so if there's $500 sitting in that account or 480, we'll do it in, it's 1,292 francs at the end of the month. Well, you're going to top up the account to what's needed. You're not going to put in the total amount that it says in your spreadsheet, in your projections. You're just going to put in the net amount. And so when that happens, whoever's doing this top up can report back to you and say, hey, there was $492 extra in that account at the end of the month. So now you know you went under budget, right? Which feels good. Every time that happens, it feels really good. And then at the end of the year, what the total expenses were, well, that's easy to calculate. It's how much money got put into this out account. You don't even have to look at the transactions. The total amount moved into the out account is the amount spent from this company. Full stop. So there should be 12 of those, right? One per month. And there might be 15 or 16 or 17 if you went over some months, right? If it's 24, well, then your financial modeling is terrible because you're off every single month. But it shouldn't be more than 24. Because worst case is you're off every single month and you've had to top it up again twice a month. And so there's only 24 things to add up. Like figuring out how much you spent in a given year is really simple. How much did you spend in any given year? You literally just pull up the bank statement for that month and look. This is something I do in my personal life. This is how my household budget works. We have an account that we top up every month. And at the end of the year, when we want to know how much the household spent, yeah, we just look at the total number of deposits into that account. And there are usually 15 of them. Like, there'll be extraordinary expenses. So some months it'll be a little bit, we'll have a second time we put money in. But it takes like 5 minutes or less than 5 minutes to calculate how much money did my household spend for the entire year, which is an amazing, quick, short amount of time to figure this out. Okay, so that's the three. The one in the middle is savings. The one in the middle is all the money that's left over. So that bank balance should keep going up. If you don't have enough in the savings account to put into the out account next month, well, you'll know that at the beginning of the month. You'll know that you don't have enough money to operate for an entire month. And in fact, you'll be able to look at the savings balance because the only money coming into savings is coming from in. At the beginning of the month, you'll be able to see what's called your runway. How many months of cash do you have to operate? Because you can look at your financial projection and say, here's the next 3 months of outs that I'm going to be spending. Do I have that in savings right now? Like, again, you can feel that just by having 3 accounts. And then if you want to make this more complicated, because everybody makes everything more complicated, you can have more. So I'm showing 2 more possible accounts here, 2 more internal accounts. One is a savings account. Like one is where you save up for your truck, for your next piece of equipment, for your next capital expense. So you can take some out of savings and put it over there so that it's literally out of the flow of the cash and just, save up for that truck The other one you can do, which is very important. Oh, there's another topic after this one. I'm remembering that now. If you have a loan and it has a repayment schedule, typical, if it's a loan from TerraFund or Africa Trees, it's going to have a monthly loan repayment. So what do you do with the money? Like if it's the second of the month and you've already paid you pay on the first of the month, what do you do on the second and the third and the fourth and the fifth and the sixth and so forth and the 29th of the month? You got to save that money somewhere to save up for the loan repayment that's due on the first. Yeah, well, ideally you have a bank account for that and you're putting the profits into that account or the free cash flow into that account so that you have the money when the time comes to make the loan repayment. You're not just hoping that there's enough money sitting around savings. And you could put it in and out if you want, but I'm just showing that it could be in a separate account. Right? In the US, it's free to make as many accounts as up to, a half a dozen or a dozen, depending on the bank. But bank accounts are basically free in the US. I know that's not true in Africa. So I would suggest 3 is sufficient. Okay. And we have a few companies that started doing this. We haven't been doing it long enough that I have an anecdote on how it works. My nonprofit Realize Impact, which runs Africa Trees and TerraFund, we've been doing this for 4 years. This works amazingly well. We're really happy with this. We used to have 6 internal accounts. We used to have in and out in 6 internal ones. We got rid of all the extra ones. We just have 1 now. Well, 2. We have the savings one and the operations one. Okay, so last topic of the day here. We're going to talk about magic fruit, which is an allegory or it's not actually about fruit. Right? I'll give you that hint. So here's a tree that grows some magic fruit. This is a picture I took, in fact. This is an apple tree at Isaac Newton's house. This is like the apple tree from Isaac Newton's house that he was watching when he figured out gravity. It actually still exists. It's in his house in England. Anyway, but let's just assume we have a tree. You have a tree. This is your tree. You have an orchard of these trees, and they grow some magical fruit. Doesn't really matter what fruit. Just picture your favorite fruit in your head. And there's a huge demand for this fruit. This is a really, really popular fruit. Like you can't keep up with the demand. So you sell a truckload of fruit. It takes you no time or effort to sell a truckload of fruit. There's no cost involved. You sell it to a customer. You like this customer, right? You met them some time ago. They begged you for fruit for months. You finally said, fine, I'll send you a truckload of fruit. And they promised to pay you in 30 days. Right? So it's common, right? You want the cash now because you guys huge demand. Everyone wants this fruit. But normal is 30 days. So you gave them 30 days to pay you. 30 days goes by. And the customer, it's 31 days now, and the customer says they can't pay. Insert reason here. It doesn't really matter. And you get upset because you could have sold the fruit to somebody else who would have paid you in cash. But you like this person. So you basically lent them money for 30 days and gave them a truckload of fruit. And this person who hasn't paid you in 30 days, who owes you the money, asks you for another truckload of fruit. What do you do? Right? Okay, you really like this person. You hit it off for whatever reason. You think this person is, you think that reason is ridiculous, but you still like the person. So you send a second truckload of fruit. You're a nice guy. You're a nice girl, nice guy, whatever. You're trying to do the right thing. You send another truckload of fruit. 30 days goes by again. You still haven't gotten any payments. You haven't gotten paid for the first truckload of fruit. You haven't got paid for the second truckload of fruit. They haven't paid you a single dime. They haven't paid you anything. No shillings, no francs, no dollars, no dimes, no pennies. And now the person asks you for 2 truckloads of fruit. What do you do? Right. In the chat window, who here sends 2 truckloads of fruit? Who here starts yelling at the customer and saying you're being ridiculous? Who here, gives up on that customer? Like, what do you do? Like, I'm sure something like this has happened to you before, but go ahead, throw an answer in the chat window. Or, yeah, I would say, Sam, this is a good place for a poll, except it takes too long to set one up. So literally open up the chat window and give us an answer. What would you do in this situation? First brave person to respond. 189 people and only one chat response. Oh, there's an interesting one. I'll deliver another truckload, but at a higher cost. Refuse. I would stop. I would not send them more fruit. You don't get any more fruit until you pay me for the first two. I'll wait to get paid. I'll demand payment. I won't give more until they're willing to pay. What was that? Je ne sais pas. I will not send any more. I will stop sending. Yeah. I'm seeing some common themes here. Okay, thank you for those replies. Reschedule the payment. I'll ask for the two payments. I will not pay. I will inquire the details for the reason. Yeah, they gave you a reason, but you're not even sure the reason's correct. They just gave you a reason. Yeah. No, very, very few answers here are I like this person so much, I'll keep going. Okay, here's why I am showing you this. Imagine the fruit is money. Imagine this is a money tree. The fruit is money. The fruit merchant's not selling fruit. The fruit merchant is selling loans. So let's go back through this really quickly here, just to show you what I mean by this. Okay, I have a pile of money. I'm a finance organization. I have a pile of money. That's my product. That's my fruit. Right? There is a huge demand for this money. There is more demand for this money than I have money to lend. So I pick out one of the customers and they promise that I give them a loan. I send them a truckload of fruit, which is giving them a loan, and they promise to pay me back on a certain schedule. And the first payment is due in 30 days. Right? If it's Africa Trees or TerraFund, the first payment's just interest only, but it's still a payment. Right? And it's due the first of the next month. Okay, a month goes by, payment didn't show up. First 3 months go by, payments didn't show up. Right? Happens sometimes. There's always a reason. It's never because they just stole our money. Maybe once, but it really rare when they just stole the money. Like, there's a reason. Hey, it rained a lot. It was not raining enough. We were supposed to get paid by a customer, they didn't pay us. There's always a reason. Like, and what I'm trying to show is that the reason doesn't really matter. What happens? Well, the other truckload can either be, we need more money. It could be the reason is we underestimated something and we actually need more money. Or it could be a year later. We could change the dates on the timing on this. And it could be that, 12 payments were due in the last year, 4 payments were made, a year has gone by, and now the company's asking for another loan. That could be what the other truckload is. We like you. You're an alumni of our program. You had great homework that you turned in. You have a decent financial model and so forth. And we said, yeah, okay, we'll give in. We'll give you the other loan, or we'll top up this loan. And then the payments still don't show up every month. Like, okay, what do you do? Right? This happens in real life with lenders. Unfortunately, it happens with lenders and borrowers, because things happen in the world. But I showed this lesson because we need this to stop happening. We need borrowers to understand that lenders are just companies with money trees, right? And these trees, yeah, the money grows on the trees, but it doesn't grow an infinite amount of money. Just like a fruit tree, a money tree here, a lender has a fixed amount of money that they have available. And if you're going to be one of the customers that buys the fruit, in this case, takes the money in the form of a loan, you got to pay it back. Just as if you sold a truckload of fruit to a customer and they promised to pay you in 30 days, well, you get upset if they don't pay you, and we get upset if you don't pay us. So this was a lesson we showed when prepping for the last batch of loans from TerraFund, to try and make sure that everyone understands that lending is just business. It's a business just like your business. The only difference is the product is money. And that gets confusing to people, that the product is money and it gets paid back as money with an interest rate, which is just the cost of the money. And just like every other business, there's credit involved, but whatever that payment schedule is, that's what it has to be. You gotta keep up. So whenever you're doing your asks for money, whether it's grants or equity or loans, what you have to do is stick your feet in the shoes of the person on the other side of the table. You have to understand what they want and understand what they need. And in the case of loans, what they need is to get paid back. So if the schedule says you pay back on this month and this month and this month, you got to do that. And if the agreement says you get that the payments come in on the first of the month, it means you don't send them on the first of the month. It means they arrive on the first of the month. And how long it takes, well, that's between you and your bank, not between you and the lender. So if that means sending it 5 days early, because that's how long it takes, well, then you send it 5 days early. It's up to you to make sure it gets paid on time. And that was my final topic of the day. People put some answers in the Q&A, so we don't need to answer those. And I'll go check the chat window. But I think we're good. I think I'm handing it back to you, Sam.
Yeah, thank you so much, Looney, for taking us through that session. Yeah, quite a number of topics. I believe 4 in total, which was very comprehensive, very detailed, some technical, and some certainly we can be able to resonate. Maybe we can take a few questions before maybe we let Looney to go. So if you do have a question, feel free to raise your hand. It would be good to take those live questions, or even maybe a reflection of the topics we have had today. We have talked about financial modeling. We have been able to simplify that. We have been able to talk about KPIs. We have also been able to talk about bank accounts, in, out, and also savings. And the last topic around the magic fruit. Yeah, so feel free to raise your hand. I'll be able to spot you. In the meantime, we do have a poll, which maybe we can take this opportunity to launch it. Maybe Victor or Fabiana, if you have the poll, we can launch it even as we check whether we have any hand up. So we have been able to launch a poll. It should be appearing on your screen. So feel free to take that poll. In the meantime, if you do have
okay,
a question,
while they're doing that, I did check, and yes, I do have a translation of the book in French. I don't know the quality of the translation because I've never had it vetted, but what I will do is I'll add it in the website as a little download at the bottom of the first page.
Yeah, thanks, Lenny. And yeah, we'll be able to put the same link on Restore Forward. In case you have missed our sessions, normally we'd actually share on Restore Forward. So just Google check your emails and you should be able to see restore forward. We have shared a lot of communication around that. Thanks. Please take the poll. We are quite a number of us here. Only that 3 have been able to take the poll. So I want to believe we are all of us here. Just click on the 3 dots. You should be able to see polls. Just click there and you should be able to take a poll. In the meantime, I don't see any hand up. Maybe Luni, this was well captured. Thanks for taking us through that session. Yeah, unless you have final comments, Luni, then we can let you go.
Thanks,
in the
everyone.
yeah. Good. So please take the poll. In the meantime, we are taking a break. Just once you fill your poll, you can rush, maybe grab some water. And we should be back here in the next 5 minutes. So let's be back here when it is 7:35 our time. So the next 5 minutes, 7:36, sorry. Yeah, at 36, let's get back. But make sure you take a poll. We're also asking you which language you communicate, because after this, we'll be going to a breakout room. And once we are back, I should be able to tell you what we are actually going to do. So make sure you take a poll. Otherwise, we'll know who hasn't taken a poll. The fact that you'll be waiting somewhere in the queue. Just click on the 3 dots, click on poll, and just take this 83. We are 191 of us, so more than 100 people have not done this. Please take a poll. It's going to happen next. In our next session, we'll certainly be able to break into breakout rooms. And if you have been able to fill the poll, automatically you'll be allocated to a breakout room. If you have not, then we'll be able to see who followed the instruction and who did not. But anyway, we are happy to take you, or maybe give you an opportunity to pick which breakout room you'd like to be part of. So in the breakout rooms, we'll be able to reflect on the topic today. So we'll be reflecting on financial modeling. From the poll here, we did ask how many of you have financial models, and from the poll, quite a number of you do have that. So yeah, feel free to share with the team. And then there is a aspect around KPIs. Feel free to share what are some of the KPIs, or how do you actually engage your team to make sure that you're on track of your business. And then we did talk about the bank accounts. Does that work, or does that resonate with your business? Does that make sense? Maybe we can reflect on that. And also, there was the topic around the magic of fruit, looking at investment. I know at some point we'll be able to have a discussion with the investors. That one is coming up soon. But feel free also to be able to comment around that. And also the question that Luni did pose in terms of how many truckload can you deliver before you get the payment. Yeah, so a lot that we have been able to learn today. But before we get to the breakout rooms, I see more people are voting, which is good. But Victor, did you want to take us through the poll result?
Thank you so much, Samuel. In the poll, we asked 4 questions, and the first question was, do you have financial records? And out of, I see 121 participants out of 177 took the poll, which is 68% completion. And out of the 122 who have taken the poll, 105, which is 86%, says that yes, they do have the financial records. 5 out of 123 respondents, which is 4%, said that they don't have any financial records. But then 10%, which is 12 out of 124 responses, said that no, they don't have, but they are willing to work on them. The second question was on what financial records do you have? And the choices were, we had the profit and loss, which is also called the income statement. And 49 out of 124, which is 40%, said yes, they do have that. And for the cash flow, we had 35 out of 124 participants, which is 28%, who also say that they have the cash flow statement. And for the balance sheet, we had 40 out of 124, which is 32%, who said that they also have a balance sheet. So it seems that the one that Tony said is the least important, which is the cash flow statement, is the one that the least number of people have. That question was on who does your financial records. I mean, because we want to know who does your financial records. With the first option was myself, I mean the entrepreneur, and 27 out of 124, which is 22%, said that they actually do the financial records for themselves. 41%, which is very interesting, which is 51 out of 124 respondents, said that they have hired a finance specialist to be able to do this for them. And 41 out of 124 respondents, which is 33%, said it's a mix of both themselves and the financial specialist who do the financial records. And 5 out of 124, which is 4%, said it is either relative or friends who do the financial records for them. Finally, we asked what language do you speak? And English, we had 85 out of 125 respondents, which is 68%. And French, we had 40 out of 125, which is that 2% of the respondents saying that they also speak in French. Those are the results of the polls. Samuel, back to you.
Yeah, merci beaucoup, Victor. Yeah, so I want to believe now we can head to the breakout rooms. Feel free to choose as well in case you're not slotted one. Alternatively, we will also be pushing more people to different breakout rooms. Yeah, so let's take the next 15 minutes maybe to engage, and then we'll be back and we'll be able to share the attendance form even as we take any program related questions. Victor, if you can launch the poll, I think that would be good. I'm happy that most people are actually taking leadership in those breakout rooms. Yeah, so let's go to the breakout rooms. Maybe you can launch that.
Yes, okay.
So the breakout room should be coming anytime soon. So if you did take the poll, you'll be automatically assigned. If not, feel free to choose the breakout rooms. Alternatively, we'll be able to push you to the different breakout rooms. Yeah, so more people are joining the breakout rooms. Thanks. You can as well click the 3 dots more and just choose the breakout room. So let's continue to go. Yeah, so I do understand that time was a bit limited for some of the groups that I actually visited. But hopefully you have been able to hear one or two people share about their own experience regarding financial modeling, whether they're keeping that, and also regarding which KPIs they're actually tracking. I didn't hear from any group that I visited regarding the bank accounts, but I'm sure we can continue this conversation even as we continue. Let's use the Mighty Network, what you think about the 3 bank account, whether it makes sense to you and whether that would actually be helpful to your business. Very unique proposition right there from Looney. I would be curious to hear from the group here what they think about that. We have a few minutes left. I'm just checking at my time. We have about 3 minutes left. And I just wanted to check whether there are any program-related questions you like to ask. Remember, today is our 5th session, so we have a couple more to go. In the meantime, I would want to ask Victor if you could put the attendance sheet here so that people can be able to fill. Feel free to open that. It will remain open for a couple of minutes even after the session. Yeah, so Victor, if you can place that, I think that should be good. In the meantime, are there any program-related questions? So maybe you can take this opportunity to ask. Is everything okay? Otherwise, also checking at WRI team, whether you have any question. Yeah, Malin, if you have a question, feel free to unmute yourself before I give my colleagues here for any communication. Yeah, Malin, and then
hi.
we can have Delhi. Yes, hi.
I wanted to ask a question regarding the accounts, because for us, we've been using one. I wanted to know if anyone that there's anyone that have used those the 3 accounts model before, because I think it will work best for people who have like more revenue, like maybe weekly payments or a lot of payment coming in, maybe weekly or daily.
Yeah.
But
okay. Thanks, Malin. Sorry to cut it short.
no problem.
I know it's a hot topic, and that's why I was suggesting if we can discuss it on Restore Forward. I see time is not on our side. We should be wrapping up now. But yeah, thanks. Let's post that question there, and all of us, we can comment. Right now, I just want program-related questions. Anything you want to know about the program. Delu, and maybe you can hold. I know it's on top of the hour. Let's just hold a few seconds. Delu, very briefly. If you're not ready, then I'll give you a chance to Aruna. Deru or Aruna? Yes.
Hello, can you hear me?
Yes, we can hear you.
Can you hear me?
Yes.
I'm sorry, it was related to the presentation that we had. It's not related to the program. I'm sorry. I will post it in and get maybe the response after.
Okay. Thanks. Aruna, are you here?
Yeah, I'm here. So
Any
my
question
question is
regarding
that,
the
my question is to know if this program, because when we talk about financial, we need also the physical meeting. Is there any program proposed about the physical meeting of this? Because it needs practical. Yeah. Is that I would like to know. Thank you.
Okay, thanks for that. Yeah, so this is just an intro. Good to mention that whoever will proceed to the next steps, we normally have a physical engagement around this where we get to be practical enough. So yeah, let's see how many makes it, but we just wanted to introduce the concept. for this specific program. But in case you have any support need, feel free to write to us and we can always connect you with Luni or any of our experts. Yeah, thanks. We need to wrap up. So the attendance sheet is in the chat. Just click on that link and then feel free to fill it anytime. We'll have it open for the next couple of minutes before we close. Otherwise, thank you. Maybe my colleagues, any communication before we wrap up? And thanks everyone for your patience. Fabiana or Victor?
None from my side, Samuel. All good.
None here either. Thank you everyone for joining. We'll see you on Thursday.
Yeah, see you on Thursday. We'll be discussing about bamboo value chain with a professor of bamboo who is currently in Belgium gathering information. So you want to join. Otherwise, thank you so much. Yeah, so feel free to unmute. Feel free to put your video on. Just say hi to us and do have a lovely evening and good morning to some of us. Thank you. Thank you, everyone. Good day.
Goodbye.
Good evening.
Good day.
Bye-bye.
Hi everyone.